Hey everybody, time for an update. But first, I want to talk about the that terrible attack in New York City. I was actually down in that location, a couple of blocks away yesterday when that whole thing was going down. I was doing an interview with NHK TV. That's the Japanese television channel, and I was just a few blocks away. But again, I mean, what a sad reality that we have to live with this now. Really, really terrible. 8 people died, 12 more injured in hospitals. Innocent people just jogging or riding their bike. I've been on that bike path many, many times where that maniac drove his truck down. So just tragic, man. Awful. I mean, 1 minute you're out having a good time, riding a bike. The next minute you're gone. I mean, that is just so awful. Words can't express. All right, so we will move on. Let me move on to the markets. I sent out to MMT Trader subscribers the analysis of the EIA weekly petroleum status report, as I always do every Wednesday. All right, that's the full breakdown on there. I don't just look at inventory numbers. I've spoken about this in the past, that the zombies, they just look at the inventory. And many of them just look at the one inventory number, like crude inventory, and they trade off of that. You can't do that, all right? You cannot do that. This report that comes out every Wednesday from the Energy Information Administration, this is loaded with information, loaded with details, and loaded with nuance. You have to understand really what is going on. Now, I had predicted a draw in crude, and that's exactly what we got. But besides the inventories, you have to look at gasoline demand, you have to look at distillate demand, you have to look at refinery inputs, you have to look at imports, you have to look at exports. All that stuff factors into sort of the fundamental picture, which is what I do in the breakdown. So if you want to get that report, if you want to get that email, go to my website, pitbulleconomics.com, and sign up for a free 30-day trial to MMT Trader, and I will send you that email. All right, so very important. We have been long the oil market now for a while. I'm talking about we, my subscribers, and everybody's doing very, very well. All right. Now, stock strong. This is all related to, I did that TV interview yesterday with the Japanese channel, and they kept asking me, how's the economy? Is this because of Trump? No, this is not because of Trump. All right. Trump didn't do anything. Trump hasn't done anything. What this is related to, or what is driving this, is the very, very strong fiscal flows. Government spending, and I mentioned this last year that just concluded with fiscal year 2017, which ended on September 30th. That was the second highest spending year for the federal government on record, and it just barely missed taking out the all-time record high of 2009, which was the stimulus year. That's the year they did that big stimulus. We're in the midst of the financial crisis and the market crash. And that turned everything around. All right. This year, we are already well above the spending pace of last year. And we have not had the new budget implemented yet. And the tax cuts, when that stuff kicks in, it's going to be like the economy is going to be on steroids. Now, as I have been saying, the Fed, either by design or by sheer ignorance, and personally, I think it's the latter, they're just very, they're sitting there, they're watching. That's how come we have not seen a big sell-off in the bond market. But that's coming. That is coming. There is no question that the acceleration in the economy is going to lead to higher inflation levels. And like I said, the Fed, by design, they might want that. Remember, I think Yellen talked about they don't know what causes inflation. They might want it to run, the economy to run hotter. Now they're starting to think there's a whole, evolving mindset here that, hey, we need higher inflation. They're going to get it. They are going to get it. There's no question about it. With that level of spending and the tightness in the labor market, they are going to get it. So the Fed's calculus on its rate hikes going out to 2020. Remember, they said there's only going to be 3 more rate hikes going out to 2020. That's going to be wrong. That's going to be wrong. We are in the very, very, very early stages of rate hikes, not just at the Fed, but everywhere. I mean, you're going to get the Bank of England meeting tomorrow, and they're going to raise rates. That'll be the first rate hike for the Bank of England in over 10 years. All right, so they're all kicking in. You had Canada raising rates. ECB eventually is going to pull back on its asset purchases. And even Japan at some point. Now, the last two I mentioned, Japan and the ECB, it's still going to take a while because their policies are really, really pushing a deflationary pressure. They think they're, the thing is, they think they're stimulating, but negative interest rates, asset purchases, that's how come all these quacks like Schiff and Rogers and Mark Faber, the print the money. By the way, he's gone. For those of you who don't know, and you want to Google this, he a couple of weeks ago on an interview just came up with some very racist slur, and that's it. I mean, media now pulled the plug on that guy. You're not going to see print the money anymore, but I'll still do the imitation. So yeah, the inflation outlook, looking ahead, is very, very bullish. Very, very bullish. So you're talking about hard assets is where you want to be. Now, the stock market's been up and up and up. A lot of money concentrated in tech stocks. But you want to start moving into these hard assets because, believe me, I'm no gold bug. I don't talk about gold as money and all this garbage. But you got to start moving into hard assets because this is just a very, very, in its nascent stages, this evolving macro trend of higher inflation. We're going to get it. It's going to be driven by higher spending. It's going to be driven by rate hikes. All this is the fiscal pump really being ratcheted up. All right. So anyway, there's a lot of information like that, as always, in my MMT Trader Report. If you want to get that, again, 30-day free trial, go to pitbulleconomics.com and sign up. You could also get my Forex trading course there. That's a 25-hour video course that's available online that you could download. There is the Understanding the Daily Treasury Statement, which I really, really recommend everybody learn about that because the Daily Treasury Statement is an amazing, amazing resource that puts you so far ahead of the game when it comes to understanding what's going on. You're beyond, way beyond, light years beyond any of the major Wall Street banks, Goldman Sachs, JP Morgan, Citi, Morgan Stanley. They don't know. They're clueless. All right? They are clueless. So, yeah, that's the update for now. Thinking about all those victims of that horrible attack yesterday here in New York City, my hometown. And, again, just want to repeat that that's a sad commentary on the world we live in right now, that has to be our kind of accepted reality, where these things are just going to keep happening. Nice, France, Barcelona, London, New York City, Berlin, everywhere. It's just unbelievable. It's crazy. But we got to keep moving on. Pick ourselves up. You got to pick yourself up. Pick yourself up and move on. All right, folks. I'll see everybody later. Bye-bye.